Welcome back to Cafe Business by Persian Horizon. I'm Moeen, and today we're unpacking one of the most talked about shifts in global capital, the remarkable surge in foreign direct investment, FDI, flowing into Dubai in 2025. From high-tech zones to green energy hubs, international investors are placing bold bets on Dubai's evolving economy. But where exactly is this money going? And what can you learn from it if you're an entrepreneur, strategist, or investor in the region? Let's dive into the data, the drivers, and most importantly, the real-world opportunities behind the headlines. The numbers are striking. According to the most recent data from Dubai FDI Monitor, the Emirate recorded over $40 billion USD in FDI inflows during the first half of 2025 alone, a 28% increase year over year. But this isn't just about volume. What's more interesting is where the money is being allocated and why. Three core themes have emerged from Dubai's FDI boom. First, there's been a significant pivot toward high-tech infrastructure and AI-based industries. Investments are no longer just about buildings and logistics. Capital is flowing into smart city development, autonomous systems, data centers, blockchain logistics, and AI-enhanced health tech. The second theme is sustainability and green innovation. Dubai's green economy strategy has gained real traction. This year alone, the city saw over $6.5 billion USD in FDI, targeting renewable energy, clean transportation, water recycling, and sustainable real estate development. The third major area is specialized industrial zones and innovation clusters. These include Dubai Commerce City for e-commerce, Dubai Science Park, and the newly enhanced Dubai AI Valley in partnership with global AI players. One standout example is the joint investment between a Singaporean sovereign wealth fund and Dubai-based sovereign entities into a $1.8 billion AI research and development zone within the Dubai Silicon Oasis. This hub is expected to house over 400 AI-focused startups by the end of 2026. What's fueling all of this? Part of it is geopolitical rebalancing. With increasing regulatory pressures in the US and EU, many venture capital firms and multinationals are seeking more agile jurisdictions for experimentation and regional expansion. Dubai offers them tax efficiency, regulatory flexibility, and a fast-track pathway to market testing. Another driver is policy alignment. The UAE government has introduced sweeping reforms in company ownership, visa flexibility, and business licensing. In 2025, the Golden Visa program saw a record number of applicants, many of them linked to FDI-based entities or innovation startups. Let's also not ignore the talent magnet effect. Dubai's investment in lifestyle, safety, education, and business infrastructure continues to attract high-performing global talent. And where talent clusters, capital follows. Consider this. Many of the investors that pack in Dubai's FDI inflow are not first-timers. They're returning investors. That means Dubai is not only attracting capital, it's retaining trust. Now, let's talk sectors. The top 5 high-growth sectors for FDI in 2025 are artificial intelligence and machine learning applications, including generative AI for business automation, AI-driven cybersecurity firms, and natural language processing startups, health tech and med tech, particularly around preventative care platforms, wearable diagnostics, and AI-based imaging, sustainable real estate and green construction, driven by ESG funds and global decarbonization mandates, smart logistic and supply chain tech, fueled by post-COVID supply chain innovation and geopolitical shipping reroutes, fintech and digital asset infrastructure, including tokenized assets, compliant blockchain platforms, and cross-border B2B payments. One case that drew global attention was the $450 million investment by a US-based DC consortium into a smart warehousing robotics company operating out of Dubai Industrial City. The firm had proven itself with a few pilot warehouses in Ras Al Khor and now plans to automate over 30 fulfillment centers across the MENA region. This kind of deal signals two things. One, global capital sees Dubai as a launchpad not just to market. And two, FDI today is focused more on functionality and innovation than physical footprint alone. There's also a powerful story unfolding in green fintech. A Canadian green investment fund recently backed a Dubai startup that uses blockchain to verify carbon offset credits for real estate developers. That one company now operates in 3 continents and has made to Dubai its regulatory headquarters. From a strategic viewpoint, here's what foreign investors are looking for in Dubai businesses today. Strong localization strategy with regional scalability, IP defensibility or proprietary tech, regulatory readiness, especially in health tech, ad tech, and fintech, bilingual Arabic-English market penetration strategies, founders who understand Dubai's business etiquette and stakeholder dynamics. If you're an investor or founder in Dubai right now, this means the window is wide open, but it rewards the prepared, not the lucky. Now, let's flip the lens. What does all this mean for local entrepreneurs, consultants, or small to mid-sized businesses? It means 3 very important things. First, you're not just competing locally, you're competing for global partnerships. Whether you realize it or not, your competitors might be companies in Berlin, Singapore, or Nairobi, eyeing Dubai as their next landing zone. Second, you can leverage FDI momentum to scale faster. That could be through strategic partnerships, funding bounds, or even by positioning yourself as a value-add vendor for a foreign firm entering market. Third, you must know the trends. If AI, sustainability, or digital infrastructure plays a role in any of your business, even indirectly, you need to start aligning now. Don't wait for an FDI wave to knock on your door. Ride it. One of the more under-discussed yet valuable tools is the Dubai FDI Navigator, an AI-powered portal launched earlier this year that aggregates investment trends, incentive zones, partner directories, and cross-border collaboration leads. Entrepreneurs using this portal are 40% more likely to connect with relevant investment leads, according to DIC data. The ripple effect of FDI also means more demand for talent, more R&D partnerships, and greater cross-industry collaboration. In fact, 2025 has already seen an uptick in cross-sector accelerators. For example, a Logistics x AI x Sustainability Lab hosted by Dubai Future Foundation. Let's also address the elephant in the room: risk. Yes, FDI inflows are booming, but that doesn't mean every venture wins. Investors are becoming more selective, due diligence processes are stricter. The hype is no longer enough. You need clarity, traction, and aligned vision. Another subtle but important trend: impact metrics. FDI, especially from Europe and Canada, is increasingly tied to ESG outcomes. Startups that can prove environmental, social, or governance alignment are receiving premium valuations. If you're in sectors like real estate, logistics, hospitality, and manufacturing, this means rethinking your operating models through a sustainability lens isn't just nice, it's commercially necessary. As we approach the second half of 2025, here's a site sketched above As we approach the second half of 2025, here's a synthesis about As we approach the second half of 2025, here's a synthesis. Dubai's FDI momentum is real. It's structural, not seasoned. It's not just about buildings, it's about brains, bite, and bold ideas. The smart capital is following smart regulation, smart people, and smart vision. If you're part of the Dubai business ecosystem, you have a choice. Stand on the sidelines and observe this FDI wave, or prepare your surfboard and ride it. Thank you for joining this episode of Cafe Business by Persian Horizon. I'm Owen, and I hope this deep dive helps you not just understand the FDI boom, but spot your place within it.